Saturday market recap. In fact, I've just sat down and recorded this weekend's Pivot Point Pro analysis class. That class, it's recorded, it's up on the website. This week, it went for 1 hour and 40 minutes. And the reason for this recording really at this particular juncture is just to inform you that, look, if you've been listening to this channel for, I'm not sure, maybe it's a couple of days, maybe it's a couple of weeks, maybe it's even a little bit longer, a couple of months, a couple of years even. There was one point, one time where I could sit down right now with you and talk to you as if I was beside you about the state of the US financial market indices. Obviously, what has just changed between that of Thursday and that of Friday's session, the class would be the one that I've just recorded today. On an order of magnitude, just to put this into perspective, what we've seen take place between Thursday and Friday, just gone more recently, maybe the closest thing, I have to be very careful what I say right now, but if I go back in time, imagine you could go back in a portal and say to yourself, look, instead of being fearful and very scared back in the fourth quarter of 2018, and say, for instance, you missed out on a large portion of what was a very profitable 2019 in terms of the net movement upon which the market at least began the year off from, say down here at 2,450, all the way through to, more recently, the peaks that we have established as recently as February of 2020. All I'm suggesting right now is that you jump on into that class and you have a listen, even if it's on one occasion, to the analysis that I've just walked through with the people who are already in that class. There is a very high probability, a very high parallel, you could say, that the psychological shift that has just taken place, obviously during Friday's session, right, is very similar to this candlestick down here. Coincidentally, right, this is based off from, of course, the last time that we have revisited this primary bullish trend line, which is now the third decelerating fan line on the S&P 500. The last time we actually revisited this candlestick, surprise, surprise, was all the way back in, right, that period of December 2018, whereby we saw this lower wick, very similar to obviously what the final print is on the weekly time frame of the S&P 500 as at the close yesterday. It's interesting how history sometimes rhymes, you could say, and what we're picking up on and what we forecasted even leading into what has been that historic intermediate top is now very much in that critical stage whereby hopefully I can provoke you enough to hopefully exit a state of fear if you are somewhat inhibited by that at this particular time, and to give you at least enough justification, objectively speaking, only through the eyes of the technicals as to why this may be, right, the crunch time as to where the markets themselves collectively have now priced in that max infliction of pressure in terms of the range of this intermediate correction all the way down to 2,475 on the S&P 500. Fed-induced, fiscally induced, no matter the case, I find it very interesting to see these parallels, just as what played out on the 26th of December in 2018, where again the Fed came out and they had the emergency meeting to again cut rates or the cash rate to drop it back then. Very similar sort of circumstances. Scenario, obviously they weren't dealing with coronavirus at that particular point, but the technical setup. I just want to ask you a couple of questions right now. Obviously I can't hear or gauge your responses, but let's just go through a couple of objective truths. Has the market broken below the intermediate or even the macro swing low back at that period of time in December of 2018 over here, right? This candlestick just here, where if you go back in your time portal and you say, well, boy, I wish I could go back and buy the market over here. All right, has the market now flinched below that? And the answer to that question as at the close on Thursday and also as at the close on Friday is that convincingly, no, it's not. In fact, the S&P 500 on Friday rallied close to 250 points, up very close to 9%. Okay, have we also produced a series of higher highs up until what? Where we were talking into, leading into the intermediate top in February? The answer to that question is yes, the markets have. Therefore, we are still at this particular time, albeit, and I know this very well, that obviously out there, fear and panic is at sort of hysteria levels right now, understandably. But are we still following along with the textbook definition of a bullish macro trend? And the answer to that question is yes, we are. Based off that psychological shift that we have seen on Thursday and Friday, at that critical level in this green rectangular box, that 2,700 area that we've been speaking about here publicly on YouTube, right? Makes a lot of sense that we're seeing a lot of confluence come together, not only on the S&P 500, but let me flick on over into the Dow Jones Industrial Average. Similar picture, haven't changed any of these trend lines. You can go back, look at all of the analysis videos going all the way back to the beginning of 2009. Pay attention to this fourth decelerating fan line. Is it a surprise really to anyone that we've seen a retest of this critical bullish primary trend right down here? Say as low as 21,250 to see this 2,000 point rally on Friday. I mean, timely, yes. It showed up finally. I mean, we were closing below it. It looked as though we were closing below it on Thursday. But this week now, it means a lot. And these volume prints, they mean a lot as well, right? Naturally, they are going to be red. In fact, on the daily time frame, okay, even Thursday's candlestick is going to be red. But if you look at the weekly, these should really be colored green. The reason why is because, of course, we're below the previous week's close to a degree of 261 points on the S&P 500. But what it's not indicating to you is that the institutional money, the smart money out there, they're actually buying this dip, just as they did back in December of 2018. And naturally, when this happens, as unfortunately, the unconditioned consensus are losing their minds, those who are keeping cool, being objective, in their approach, are understanding that even these red bars, they're really not red, right? Just a quick hint, they're really green. And it's a lot of people buying down here around these areas that we've spoken about prior to the markets actually coming back down to retest them. Yesterday was a point of confirmation on the markets. Friday was a big thumbs up on the markets. Yes, it's only one day, and yes, it's very early on in the process, but there is a very high probability, right? Even though markets can remain volatile, yes, they can. If you just look at these trend lines, this is the NASDAQ, right? Q4 2018, last intermediate correction. Here we are, Q1 2020. Are we still printing a series of macro higher lows, right? It's no secret. Yes, we are. In fact, for the NASDAQ to really turn bearish, we need to close below 6,500. And in fact, 6,500 is where the extension is of this bull market since 2009, right? All the way down here, right? Projections. When I zoom on in, this is it just here. The macro primary bullish trend, 6,500 points. Okay, this is a weekly closing point. So when I bring up, obviously, the candlesticks, you're going to see that intra-week volatility. But right now, if you feel concerned about the market, understand that that's natural. All I'm trying to suggest is that with the right critique, the right analysis, you can unlock partly anyway, or at least understand the signposts as to where future decisions, I'm talking about macro decisions on the market indices, are going to take place. We've carefully considered these trend lines. And I mean, you can already see the reaction, right, very quickly on Thursday and Friday, whether it's the NASDAQ, whether it's the Dow Jones or the S&P 500. And obviously with this is going to come with it a lot of opportunity when it comes to individual trades. There is one trade in particular that I'm very excited about on a long-term sort of view, right? Even incorporating longer duration options into that trade setup. There is one tech company on my list that I got to be careful here. People have fallen out of love with, but this is just the sort of the atypical basing bottom when it comes to a trend line which has been in effect for pretty much 3 decades now. And it's something that I haven't seen in a very long time. So if it's just for that individual stock, regardless of the overall market, all right, now is that time whereby if you could go back into that portal, right, go back in time. If there was 1 week where I could say that, look, to me, these things are awfully similar. It was right at the depths of 2018 Q4, where everyone again assumed that this trend line was going to break. It held, and the rest is history. I'm not suggesting whatsoever that the market itself is going to take off to the degree and to the angle of ascent that it did, right? January through to April, whereby we pretty much just beat our head into it for a lot of the rest of the year. We just lingered above April before, of course, we've kicked on off into the more recent bullish trend. I'm not suggesting that we're going to see something like that, a very strong V-bottom recovery, but there is a very high probability, and I want you to understand this, that as at the close on Thursday, that this may very well be that max pain in terms of an intermediate range from the top to now the bottom, whereby again we can linger around this area, but there may not come another opportunity whereby the market actually cracks below this level if this is going to be the conclusion of that intermediate trend. And it's, I feel, my responsibility to tell you that. Obviously, I can't go into all of the nuts and bolts of the analysis publicly here on YouTube. It's unfair for other people, obviously in pro. And all I'm saying is I suggest that it is very much so in your best interest. If you're unsure about the market, if you're looking for objective truths as to where the market is, where it's gone, where we're thinking it's heading, it's a good opportunity right now to be told what they are and what to look for moving forward. So, I mean, I generally don't do these types of videos. All I'm trying to say is that this is potentially a critical point which has been retested. You've obviously, seen what has happened and transpired on Friday's session. And if you think that's the end, or if this is a clearing rally, that's the end of it, maybe short term it is. But if you take your, the prism and your time duration upon which you're looking at this market, and you're moving it from the minor level up to the intermediate level, and then obviously back up to the macro level, we're pretty much at the extremes of where this macro and intermediate level should stop. This is going to be the end of an intermediate move, right? Volatility is obviously going to persist. We've got the VIX still up above 50, but we're just going to have to follow along with this, all right, moving forward. So anyway, do with it as you please, everyone. I'll still continue to bring you intra-week market updates. All I'm suggesting is that if you want more information, more detailed analysis, also on these companies over here, Apple, Amazon, Baidu, Caterpillar, COP, Disney, Google, IBM, Microsoft, and Netflix, jump on in and have a look. That's all. Otherwise, enjoy your weekend, everybody. That video is up online. Hope you enjoy it. And I'll see you next week for some more market updates. All the best. Farewell.